In 20 minutes, I'm going to accelerate your familiarity with some of the things taking place in global energy. The title of this talk today is the Re Electrification of Everything. I travel the world and this question is the one we have to ask. You know, as I said in our panel, it's an easy prescription to write, but a much harder one to take. This map is embellishing one thing, one very important thing, and I think you have to associate yourselves with what is not visible on this map. This map embellishes the countries that export oil. The more oil you export and the higher the price of the oil, the more income you have. Of course, we see Saudi Arabia, Iraq, Iran, Kuwait, Russia. That's not how you have to think as an investor. You need to think like the Japanese, the Chinese, Germans, Italians. They are not on the map. Do you see India on this map? That's because they import oil. For the last 115, 120 years, they didn't really have a choice. It was a cyclical thing, but now with adoption and technology and innovation, they can actually switch away, slowly but surely, from incumbent energy and into technologically advanced energy. Believe me, the Japanese don't want to import fossil fuels in perpetuity the same way it was in the past. This is changing. This is a picture of London. Many cities around the world have now come up with a mandate that by such and such year, you're not going to be able to operate the internal combustion engine. Everyone is aware of that. There's countries, cities, and it's because of the pollution. Climate change is one part of the discussion. We're not going to talk about that today, but it's really the particulate pollution. It's social issues. And the way you alleviate this, step one is to have different behaviors, the way people operate machinery. You have electric transportation, particularly the things that operate 24 hours a day. And then you get to the way we electrify these forms of transportation. This is where oil is used. Only 55% of every barrel of oil is used for transportation fuels. I will show you the pieces of the pie I'm talking about. Road passenger vehicles, road freight, maritime trade, and aviation. It's safe to say that transportation is the biggest customer of big oil. So as transportation is disrupted, it's a line item out of oil demand. Lee Iacocca used to run Chrysler Corporation. Before he retired, he won all the awards. He pivoted that company and he made all those cars, the Intrepid, the minivan, the Aries, all these cars that were very good sellers. And it's the same line we could use today. Lead, follow, or get out of the way. They have to. They don't have a choice. There's a lot of pressure points that the automotive business has. The most important one, perhaps, is the biggest customer is China. It's the world's largest car market. So they're the leaders. It's not like it used to be. And you could see that they only passed Japan and the United States. They only passed the United States just a few short years ago. These are 49 different brands of electric cars being sold in China. They may not all be tremendous successes at this point, but it's leadership. They're innovating these things and they want to create it for their own domestic market and export it around the world. This is the Build Your Dreams. This was the publicity stunt when they announced that they would electrify the bus fleet of Shenzhen City, which is effectively, if you put two Torontos together, that's what Shenzhen would be. Basically in one day. And if you see the statistics now, it just shows that it is possible. So the laziness of incumbent systems, the Chinese are showing that it can be done at grand scale. Because of their position so far, it is told they're displacing 300,000 barrels of oil per day because of where they are already in electric transportation. So it's becoming a line item. There's a company in Northern California named after a famous Serbo-Croatian scientist. They're now coming out with another disruption. They've announced that they would like to electrify trucking, and it's once again forcing the incumbents to pivot their business models. You think this might be lip service, but if you go to Europe, if we look at the big six, they were slapped with collusion charges. These companies did not have, their trucks did not become more fuel efficient in 25 years. 25 years. Because of this, they have these collusion charges, and they have to be 50% more efficient by 2025. Now, I'm not talking about electric cars. One, they'll change the shape. Two, they will improve on the diesel engine or make a hybrid or electrify a portion of these vehicles. This is overtly bearish for that piece of the pie for road freight. It cannot be any other way. When I drove a Tesla across America, people used to say that when I drive this car, I'm charging it with fossil fuels, coal, for example. That might be the case in certain places, but that's not where we're going. The future of this is going to take place increasingly so with renewable energy. Bill Gates commonly says that the books he likes to read the most are from the Canadian Vaclav Smil. Is everyone familiar with the gentleman above Bill Gates' picture by show of hands? Anyone here? And Vaclav Smil is someone who's not been a big believer in renewable energy. He was at CERAWeek, and he said that in the past, since 1990, there's only been a 5% pivot from renewables or into renewables from incumbent energy sources. And that's true, that's correct. But what he fails to recognize is that all of the action has happened in the past 5 or 6 or 7 years. There's a graph of wind energy escalation in China. To give you context, that's 150 gigawatts that they installed till 2015. British Columbia Hydro, capacity 11 gigawatts. Quebec Hydro, 36 gigawatts. That's how much wind the Chinese installed in about 6 or 7 years. The same can be said for solar. The International Energy Agency was telling us that it would take, in 2010, they said it would take 15 years to install 150 gigawatts of global solar power. They were wrong. How wrong could they have been? By 2016, we had installed 290 gigawatts. It's happening a lot faster than most people recognize or appreciate. So when I show this graphic and I tell people that that's the future, this is how we are going to charge not every electric car, but many electric cars. We saw the gentleman's question. In California, it's mandated every new roof has to be solar. Well, every one of those new roofs is going to be charging every one of the new electric cars in the next 5, 10, 15 years. It will not be a thermal coal plant. And this will be echoed economies, cities, towns, counties around the world. China State Grid, this is the shape of China. It's the world's largest electricity company. The gentleman there on the left, his name is Xu Yinbiao. He has 1,100,000,000 customers. Last year, they achieved electrification for every person in China. They achieved it. Now, it happened maybe in a clumsy way in certain circumstances, and what they're doing now is the Re Electrification of China. And this is going to be led by renewable energy, augmented by natural gas, weaning themselves off of coal with a rapid escalation, hyper adoption of all forms of electric transportation, and it's because of particulate pollution. They've installed 170,000 charge points. He's built 30 high voltage lines, 80,000 kilometers worth. In many cases with DC, for those that are not electrical engineers, we're not going to get into that point, and they're demonstrated. They're showing how this pivot can take place, and they're showing the world. So I ask you again, the future demand of oil, this is what big oil in the IEA, they believe that the demand for oil will continue to increase, and it surely has in the past 2 or 3 years. Oil has been relatively cheap. But what happens when you put in efficiencies, fuel switching? If you think like the Japanese or the Chinese or the Indians, and they have solutions now, this is going to impact this graphic. I'm an investor. I don't really care where we end up in the delta. All I will suggest to you is that in the medium to long term, this is not a growth business, not a growth business. So during CERAWeek, which I've mentioned a few times, this picture here with Mr. Daniel Jurgen and Fatih Birol, he's the chief executive of the International Energy Agency. I think Ben Van Beurden, his commentary was very interesting. He runs Shell Corporation, and he says that they are going to be more of an electricity provider in the future. He understands they're no longer of the largest companies in the world, and they have pressure. When he talks about climate change, Mr. Ben Van Beurden, he takes a piece of paper and he reads. He's told what to say. Very interesting. There's investors that have these companies. They're also a European-based corporation. We talked about the scenarios and the hyper-adoption. I talked about Bob Dudley and his ridiculous statement, hyper-adoption on electric transportation, but static on electricity. But it's this gentleman with China State Grid. He made a comment with Dan Jurgen, and I have them both smiling here, you'll notice this, and he said that, to give the crowd an example, he personally, in China, bought an electric car. And jokingly, he says when he charged the car, he went and did some exercise for half an hour. And Dan Jurgen was laughing at him, and it says, at least we learned one thing. When you're charging your electric car and waiting, you can go do your exercise. And they kept saying this joke. And the next day, they talked about it. And of this greatest gathering of energy people in the world, do you know what the final line of the whole gathering was? And perhaps the most interesting thing I learned, said he, Daniel Jurgen, is that when you charge your electric car, you can do exercise. Wow, the ignorance. They don't appreciate it's already pivoted. It's already pivoted. The most profound quote was from Mr. Samir Asaf. He's the most important investment banker at HSBC. Fifth largest bank in the world. $2.5 trillion of assets under management. The four largest banks are Chinese, then HSBC, then JP Morgan, then the rest. So what did this banker tell the oil executives at CERAWeek? He said, people, today, HSBC has 30 billion of exposure on the balance sheet to oil and gas. We have 1 billion of exposure to renewables. Then he said, we also have pressure, we have investors, and we have to tell people where we have exposure. By 2022, because of the Financial Stability Board, they have to list this exposure. And you know what his exposure is going to be in 2025? 100 billion to renewables. 100 billion. They're going to cause investment to happen. You as an investor, of that 100 billion, 5 or 10 billion of that is going to end up in critical elements to make it possible. The biggest proponents of the divestment movement, unbeknownst to themselves, is going to be the Norway State Pension Fund and this gentleman here, Mr. Mohammed bin Salman Al Saud, the Deputy Crown Prince of Saudi Arabia, Vision 2030, allocating between 500 billion and $1 trillion into what? Renewable energy. He announced 4 weeks ago with the Japanese SoftBank that they will build a 200 gigawatt solar park in Saudi Arabia. He was in America 3 weeks ago and he toured and he met with many people. He was at Starbucks taking pictures. Time magazine did a 10,000 word interview with the gentleman. I did not realize this. The purest silica in the world is in Saudi Arabia. They have huge tracts of land and unlimited sunshine. What will he do with all this electricity? Many things. Because what Vaclav Smil fails to recognize is that you can make aluminum with renewable energy. It's congealed electricity. You can desalinate water in the desert and irrigate the desert with solar energy. There's many things you can do with this, but more importantly, he will export this technology around the world. The science fictionist Carl Sagan once said, it takes no harm to the romance of the sunset to know a little bit about it. What I'm suggesting to everyone here is that you appreciate the magnificence of electricity. If you cut it in half, what makes it work? Who are the winners and losers? Those same scenarios from Shell Corporation has already told us 20% of the world's global energy today is electricity. The balance is the fossil fuel incumbent mix. We are going to eventually electrify everything. It took 120 years to get to that 20%. We will achieve the balance in the next 50, 60, 70 years. It's the electric metals that are going to make that possible. No one will dispute this fact of science. When you make the internal combustion engine more efficient, you use less oil. 45% of the world's electricity today is consumed by a motor of sorts, and we will have billions more motors. But when you make an electrical motor more efficient, you use more copper. The word copper, I stress again, was not mentioned at CERAWeek. He doesn't want to be a victim. Rick Rule will always tell people you can be a contrarian or a victim. He's a contrarian. He is investing in the future of energy, electricity, including copper. This is the new Holy Grail. And if you could stretch your mind just a little bit, we know it works. When will it be scalable? The answer is today. If you build a high-quality home in Germany, California, Australia, this is how you're going to do it, and it's increasingly going to take place in the future. I'm going to talk about copper now, and so people will tell me that if I take houses in the tens of millions off-grid, I will use less copper. That's true. But the average American house today has about 400 pounds of copper per home. This house will have in excess of 1,000 pounds of copper off-grid. It's still a tremendous opportunity for the red metal. I was telling people that copper will decouple from everything, particularly oil, and that did manifest itself. But now that oil is caught up, we're back into that monolithic trade. What oil does, the rest do. Here's the short-term graph. People say, hey, Kovacevic, you're wrong. What decoupling? You need to take a longer-term horizon. I'm going to show you another graph. What we're looking at here is aluminum, copper, oil. These are the energy commodities. Because if we're not going to use copper, we're going to use aluminum. Let us go back to 2000. You see a decoupling? Oil's the bottom line. Start at the beginning. Start in 2000. They're identical. Up with the up, down with the down. Up with the up, down with the down. But guess what? Copper has decoupled. Today's copper price, which is $3.10 a pound, is effectively, if you were to look at the same ratios, same proportions of up and down, that's like $100 oil. Today. We also recognize that aluminum is the substitutor for copper. If copper was to go very expensive, we substitute to aluminum. Guess what? Look at the price of aluminum. You can't even see it, but they're identical. The two lines are together in tandem. It's a 3 to 4 to 1 ratio. If that ratio is kept, you will not substitute to aluminum. Here's why I'm so optimistic on the price of copper. I have 3.5 minutes to end my talk. Almost every pound of copper that's fabricated in the world today is used to make something that creates, transfers, or utilizes electricity. Not plumbing, not piping. Okay? There will be countless tens of billions of more components to make all what I just talked about possible, and the leading investor is going to be Saudi Arabia. What oil was for the last century is what copper is to the next century. This is the bean counters. The only commodity of the big five that has significant demand growth, logically, is copper. Now, there's aluminum and natural gas play a role, but in the long, long run, we will have CAGR growth for copper. So I will suggest to you that the demand for copper will not be like oil. It will have a higher amplitude. But where does the copper come from? This is the statistics I show my friends in the oil business. Oil comes from 4,700,000 individual wells. A lot of people making decisions. 6 or 7 countries have 100 years of reserves. 50% of primary copper comes from 25 mines. Now I listed here as 20 for 45, but 50%, 25 mines, average discovery year 1928. We haven't found a lot of new copper. In 2010, the 15 largest copper producers ran 1.2% through their mills. That's fallen, 0.72, and falling. If you're in Chile and you mine 30 million tons of rocks a year in 2010, today, you've got to mine about 40, 45 million, same metal yield. We invested a lot of money in the last couple cycles. We've been here, I've been to Cambridge since 15 years. We've went through 2 manias. The red line, the investment in exploration. The gray bars was the discovery success. We did not find a lot, folks. We did not find a lot. So when you look at the next 3 years, these are the bubbles of the big mines coming online. The last one we have is Cobre Panama, which I've been to 10 times. I was an early investor, made lots of money. I did the keynote for these people not 3 weeks ago. There is nothing of significance coming online 19, 20, or 21. This is happening in coincidence with the CAGR growth in demand. The circle, it's all small mines, really small mines. We've had underinvestment, and now that's coming home to roost. If this was a ton of rock at 1% grade, which is not, today's copper price on the LME is $7,000 a ton. So that ton is worth about $65, $70. That's not the future of copper mining. It's 0.5. In fact, it's lower than that. It's going to be 0.3, 0.4. A ton of that ore is worth $33. Not a business. You go ask any miner out there to build a new copper mine, not a business. If I give you $4 copper, it's worth $44 a ton. Not a business. Do you think they talk about that at big energy gatherings? No, they don't. Do you think they know that only a few companies produce the world's copper? They don't care. This is why I believe the copper price will exceed its old all-time high. If you can stretch your mind once again, give me some latitude, the orange line will, at the old all-time high of copper, would indicate $10,000 a ton on the LME. So $4.50 a pound would be $10,000 a ton. The future of copper mining, which is all predominantly low grade, a ton of that ore at the old all-time high, it starts to maybe make some economic sense. Copper, in my opinion, is going to exceed the old all-time high. And this will happen in the coming years, the next 12, 24, 36 months. That's like oil going back above $150 a barrel. There should be, if any commodity goes back to its old all-time high, that should ensue with a mania. It should. We'll see how this manifests itself. I'm the chairman of Copper Bank. People have followed the story for many years, and last week I have a new partner. So Giulio Bonifacio, who was with Nevada Copper for 13 years, has bought into our strategy, and there's the 3-year graph. It's trading around 9 or 10 cents, and I urge you to very carefully follow our news flow. And if you do believe in some of the statistics I've given you, if you believe that copper prices can trend higher, it's time to pivot into copper. And I'm suggesting, because I am the largest shareholder and we've had the most insider buying of any listed company in Canada, of course I'm conflicted, but speculate with me. And I'll see you in January at the next conference. My email, gk@copperbankcorp.com. I have 3 copies of my book, preferably for 2 people under 30 and 1 person over 60. Sorry to discriminate with everyone else that's got a job, but if you're over 60 or under 30, I'm more than happy to give. I got 3 copies here. I wish everyone very happy investing, and we'll see you soon.